A Greenwood woman says she's a prime example of what can happen when you turn to payday loans. She used at least a dozen and found herself thousands of dollars in debt. And tonight she's urging others to only look to the short-term unsecured loans as a last resort. This comes as a proposal has been filed at the State House to expand the number of lending options available. RTV6 State House reporter Katie Hines explains.
Tiffany Turner spent 2 years borrowing more than she could repay.
I think I went from one payday loan place, did my 6, then went to another, did my 6, and it was just, it is a cycle that you can't break.
It started in 2011 with one loan, $300 for Christmas gifts.
It was pretty easy. You just bring in a pay stub to show that you're working, a current one.
Turner says she was swayed by the fact that she could get the cash the same day and her poor credit wouldn't stand in the way.
It felt good. It felt, like, hey, I got some extra money.
Good until Turner realized she couldn't afford the interest, fines, and fees. At her worst, she owed $2,000.
By the time that I was making more money, I'd already have so many fees from the bank, from the payday loans, that the money I was making was just going straight there.
Borrowers are required to sign a contract before getting a payday loan. That contract outlines the details for repayment. Turner takes responsibility for signing the document without reading it, but she's sharing her experience in an effort to warn others of the cycle that she fell into. A recently filed bill would remove the limit on interest, allowing lenders to charge 36% of the unpaid balance, no matter the dollar amount. It would increase delinquency and short-term finance charges. The 64-page bill would create a new category of short-term loans under state law. With unsecured consumer loans, lenders could charge up to 45% interest. The proposal would also require a financial literacy course for anyone who takes out 3 short-term loans in 2 years. Matt Bell, who's lobbying for the new short-term loan, says there are alternatives that are less expensive, regulated, and offer the opportunity to earn credit. But the CEO of Brightpoint is questioning any talk of expanding options. He says the high-cost loans could have devastating consequences for borrowers and community stability. And important to note, another separate proposal has been filed. We first told you about it a couple of weeks ago that would cap the rate of interest on those loans at 36%. Neither proposal has been scheduled for a hearing. Reporting live downtown, Katie Hines, RTV6.